Good morning, traders. Scott G here with the Simple Trading Life, doing an early Monday morning session, and we're gonna catch price action here. We almost always do it in the afternoon. I'm gonna start trying to do more mornings so we can see the early price action in the day. We know that typically between 9 and about noon, and then again from 2 until close are the most volatile times of the day. And let's just jump right into it. We got ES here, the 30-minute chart. As you can see, price went right up to our support level at 32.2125, and then whipped all the way back down to the 20 SMA. That's what our blue line is, and now is whipping back up. So as we've seen in previous days to end last week, we're getting a lot of whipsaw. Okay, so whipsaw, for those of you who don't know, is when price goes one direction and back the other direction and then back the other direction and goes back and forth. That's why they call it whipsaw. It's whipping back and forth. It makes it very difficult to trade unless you are super quick. And if even if you are, sometimes you'll miss the move. So give me 1 second here. I thought I had you guys up on my phone. I think I have to wait until the video starts. Excuse me, not video, live stream. All right, here we go. Perfect. Okay. Hang on 1 second. I just had a message I had to answer. Okay. So several of you are in here already, so that's awesome. And again, I thought what we would do today is we'll watch the early morning price action together, and we'll kind of see if any trading opportunities present themselves on ES. And then I'm also going to kind of show you guys in our room, which is thesimpletradinglife.com. Over the weekend, I talked quite a bit about trend trading because several of our members and a lot of our members are either brand new or they're new, maybe considered novice in terms of experience, or intermediate traders. So those are predominantly who are in our community. And we try to keep things very simple, and we're trying to help people become consistently profitable. And we do have some very experienced traders in there as well. I mean, we have stuff for everyone, but the majority of traders in our room would fall into the new, struggling, or improving categories. And several of them have been asking me, both in the room and via DM, a direct message, can you show us some sort of strategy that is very simple and has a high probability of success? So I suggested over the weekend for people who are looking for something like that they look at basic trend trading strategies. So we're going to look at a couple of those here this morning. We'll kind of flip back and forth and look at different things. I even presented a trade last night in the room that was what we call set and forget trade. And that's just simply where you enter a trade, and then you have a stop, and then you have your take profit area. Some people call them OCOs. One cancels the other. So if your profit target is hit, it cancels your stop, or vice versa. If your stop is hit, it cancels your take profit target. So I presented one of those last night in the room, and it worked beautifully. And it was based off of simple trend trading strategy. And there are various trend trading strategies. Most of them, if used correctly, will work as long as you're conservative. And that's the key, is being conservative. I talk about that all the time, both on these live streams and in our community. Consistently profitable traders, for the most part, are very conservative. And I'm talking about with their targets, with their strict risk management. You know, they have very tight stops. They have very conservative targets. Now, I'll reference somebody that I referenced in the room here in a little bit, a trader that I've recently become acquainted with that's a professional Forex and futures trader who, over the course of his career, has made millions and millions of dollars. and he takes very, very conservative targets, but he leverages his trades. Now, he's in a position to be able to do that, and we'll talk more about that here in a little bit, but he has very conservative targets, but he's going in with big size. And he has the ability to do that. It's still only a very, very small percentage of his account, right? So he's adhering to strict risk parameters, risk management parameters, but because he's grown his account so big over the years, he's able to go in with really big size and take these super high probability trades and get out. He's typically targeting 20 to 30 pips on Forex or 20 to 30 ticks on futures, and he gets out. Okay, I mean, that's just what he does. I mean, even if, and I'm just making something up, let's just say that, from here up to here, this could have been a trade, and let's just say, I'm making this up, let's just say that's 80 ticks, right? He still is only looking for like that 20 to 30, and then he just gets out, right? So we'll talk more about that later. But as we look at price action here, I see we got a few more people joining us, so welcome this morning. Again, price whipped up right here to our resistance level, then it whipped down and went right to the 20. I mean, you can't make this stuff up, right? Right to the 20, then it whipped all the way back up. It even went slightly green for a second, and now it's pushing down again. All right, and if we come down here and look at momentum, let me draw this in for you. Momentum until just a second ago, right, was to the upside, and now it looks like it's trying to break down below. It looks like it's trying to break down below. And then this is what we had last night. Okay, I was awake. I was actually posting in the room when this was happening. You see this big drop that we got. Let's see what it was. It was 32.22 down to a low of 31.98 or 96. I can't see. My eyes are really bad for small print. But anyway, 22.20. So that's about a $30 drop, 30 plus approximately. To the downside last night. Then we came right back up to our 32.06 level. Then we came down, tested our 31.95 level, and look how these levels are respected. These were updated. Some of them didn't change at all. Some of them were just barely tweaked, but these were updated for the new week. And then look how they were respected. Then price came up, consolidated, made another move up here, and now back to the 20, and now we're going to see what direction do they really want to take it today. So we will talk about some different things that you can look for, especially if you're looking for higher probability, low risk trades that are very easy to identify and very easy to execute on. So, for newer or struggling traders, I really think you should look at something like a trend trading strategy. Or you can look at opening range breakouts. Now, opening range breakouts, it's kind of funny. Sometimes you'll go through a period where 5 or 6 days in a row, they work every single day. And then you might get a period where 2 or 3 days in a row, they don't work or they give you false signals. And that's what I mean by don't work. Because if they don't break out of a range, there's nothing to do. Right? If that's the strategy you're trading, and I want to be clear, whatever strategy you trade, you want to follow those rules exactly. Don't try to start mixing a bunch of strategies. If you're gonna be an opening range breakout trader, then you need to follow those rules. If you're going to be a trend trading strategy trader, then you need to follow those rules. Right? You can't just start mixing and matching stuff together and then wonder why they don't work. But I was going back last night. I was doing some testing on opening range breakouts, and I was testing it on Forex currency pairs. I was testing it on futures. I was testing it on equities, and I found the same patterns over and over and over again. 4, 5, 6 days in a row, they would work every single time. Then you might have 2 or 3 days in a row where it would give you a false signal and you'd probably get stopped out, right? And there'd be 1 or 2 days mixed in where there was just no signal. Then I was looking at different time frames and different times of the range. So what I mean by that, and I don't want to confuse everybody, there are opening range breakout traders who trade the opening 15-minute range, the opening 30-minute range, and then the open 60-minute range, or hour, the hourly chart. Which one is the most consistent? And I think it actually varies. And I don't have any hard data to back this up, but I'm just going off of the little bit of testing that I have done. It seems to me the 30 and the 60 are more reliable, and there are different ways of trading it. So let's talk about that first before we get into the trend trading strategy. Let's just say, okay, we've still got time here. We've got a little bit less than 12 minutes left on this opening candle. Let's just say you're doing a 30-minute opening range breakout. Well, this is your range, okay, and it's going to be pretty big this morning. Let me hang on a second here. I went to the wrong thing. Now, this may change before the end of this candle, but I'm just giving you a hypothetical right now. So let's say that this is your range. Okay, so it's high to low. All right, high to low, and then it's just what it sounds like. You're waiting for a strong breakout either of the top or the bottom of the range. Now, there's a couple different ways to play this. There are some strategies that say you just identify the next likely level that it's going to go to. All right, so for me, if this broke out here, you're at basically 32.05. If it broke down here, I would actually be looking for a take profit target around 31.9850, which would be right across the top of here. Okay, that's one way of doing it. Another strategy says you take the opening range, and if it breaks out of one side or the other, you're looking, and they'll tell you that it's likely, and again, you have to back test this to see how often it happens, that it's likely that if it breaks out, that you will you will copy this range. All right, so if this range is, I'm just going to make the math easy. Excuse me. If this range is $15 and it breaks out to the downside, it's basically saying your take profit target should be $15 below here. All right, so if it's 32.05, that would make it 31.90. So it would say that your take profit target should be 31.90. That is another version of an opening range breakout trading strategy. I was just fiddling around last night with each of them on different time frames, on different asset classes. It did seem that both of them seem to work pretty well when they work, right? Nothing's going to work 100% of the time. So I'm conservative. So when I trade opening range breakouts, again, I'd be looking right across here at 31.9850 to 31.99, and that's going to give me $6 to $6.50 move. Pretty conservative. Is it likely to get down here? Probably is, right? I'm just being ultra conservative. Or you could put your target just above this support level. So maybe at 31.96 instead of 31.95. That would give you about $9, okay? But if you use the other strategy, which says if this is the opening range and it breaks out, and that can be at any time, it does not have to be on the next candle, right? Maybe 3 or 4 or 5 candles later is when it finally breaks out. The other strategy says whatever the size of this range is, okay, and if you're going off a half hour, then you stick to the half hour. If you're going off an hourly, you stick to the hourly. Okay, so if you're going to use an hourly opening range breakout on this 30-minute chart, we'd have to have 2 candles. Well, what if that next candle, comes to here and then comes back in? Well, then that range is that much bigger. All right, So I hope you guys understand that. But I typically use the 30-minute. I'll occasionally use the 15 or the hourly. But if I'm trading it, I typically trade the 30-minute. And me personally, I'm looking for that next area where I think price is likely to make it to conservatively before you may see a bounce. Okay, so that's how I do it. All right, so that is the opening range breakout. Now I'm going to take this off because we don't know that this is the range yet, right? It could be bigger, it could be smaller. That's a pretty decent sized range if it does end up a $15, $16 range. All right, so we're going to keep watching that. Now let's start talking about trend trading strategy. And I see we got another new person or two that have joined us, so welcome everyone. If you're brand new, first of all, thank you for being here. Please give us thumbs up on the channel and subscribe. Click that subscribe button and turn on your notifications bell, and you'll always know when we go live. All right, and like I said, we're gonna maybe start trying to do some more mornings, at least mix them in, if not eventually go to more mornings, but we'll kind of play around with that because we have mostly been doing afternoons around 2, sometimes a little bit before. All right, so let me go to my Trend Spider here. This is a new platform that I'm testing out, and so far I like it a lot. All right, and let's go to, I think I'm going to go to SPY. Let me go to SPY. I have to get where I need to go first. Turn that off. Okay, SPY is a very, obviously it's the ETF of the market, of ES, what we were just looking at. And you're going to see, if I go to my indicators, okay, you're going to see what I have. Okay, this is the short term. Okay, this would be for scalping or day trading, a short term 821. All right, 821. I talked about this in the room the other day, yesterday. So that's the 8 exponential moving average, and that's the 21 exponential moving average. So the 21 is what we call our signal line, right? The 8 is where we're looking for price to be above, okay? And the 21 is what we would refer to as our signal line. And then we use the 100 simple moving average, as our trend line, meaning, and you're going to get this here in a second, if the 8 and the 21 are above the 100, we're looking mostly for long trades, predominantly. If the 8 and 21 are below the 100, we're looking mostly for short trades. All right. And then the only other thing I have on my screen is a volume indicator. Down here in this line, okay, this just shows you that is the 50-day or 50 period moving average of volume. So when the volume is above this line, we know that that is actually increased volume, that is abnormal. It's abnormally high. So you can see where it occurs, okay, like right here. When we had that drop, you see this? When we had that drop, look at the volume. See that? Okay, red is obviously selling volume, green is buying volume. So both here, okay, let me do this for you. Okay, here to here, actually all 4 of these candles were over the 50 period moving average for volume. So increased volume, right? And it was to the downside, and look at the big drop that we got. All right, that's on SPY. Now, here's what you want to do. If you are looking for short-term scalps or day trades, I can scroll out to start off with to make it easier for you to see. Okay, the blue line is our 8 EMA, the red line is our 21 EMA, and then the green line is our 100 SMA. So we've got the 100, right? And it's trending up, right? We're going to look at some other things, but it doesn't have to be trending up, okay? But it's another bullet in your holster if it is. So the 100 is trending up. Both the 8 and the 21 are above it. and the 8 is above the 21. Okay, so now what kind of things are you looking for in terms of trades? Now, first of all, I want to squeeze this in just so you can see what have we been doing in the short term. Trending up, right? We're trending up in the short term. Now, we were in an expanding range. That's what these two were. We have broke above it. We dropped back down in. We broke above again. Okay, kind of put in a double top right there, but we did not go lower, right? We came back to the top of the range. We bounced, we bounced, we bounced, and we're still going higher. But overall, we've been trending up. In fact, I can do this. Give me 1 second. I can never remember which line to use. I think it's this one. I'm brand new at using this this platform. Okay, so let's do it sort of like that. I'm trying to get it underneath here. There we go. All right. See how we're still going up. So until we break below here, right, and when we start seeing lower lows and lower highs, the trend is still up. Now, this is a short-term strategy that we're talking about right now. Now, let's go back over here, because here is where the 8 and the 21 crossed above. This is not a crossover strategy. This is not a crossover strategy. We're taking the highest probability trades that we possibly can, and these are scalps and day trades. All right, so let me move this over, and I'll expand the screen so you can see it. Because I'm going to show you how you start looking for these trades. All right, so here, right, here's where both of them crossed above. Okay, and then look what we have right there. Sort of a hammer looking structure. Let me stretch it out for you. Right here, okay, bouncing off of the 8. So you could draw a line right above here. Now, somebody who's really aggressive, where they would have drawn the line is like right across there. So they would have entered just a little bit before. Okay, but if you're conservative, and I'm typically conservative, you take right here on the break of this candle, and you see the move you got to the upside before it started to pull back. Okay, where did it pull back to? Right to the 8. Okay, so there's a couple different ways to play this. The first way is you have a predetermined number that you're looking to achieve that is very conservative. All right, so the top of this candle was 307.92. So at around 307.95, that's your trigger to go long. Okay, and I'm just going to say, let me see, I want to look at something here. Okay, that's 310.93. So that's almost a $3 move from here to here. See that? Okay, on SPY, that's awesome, right? On SPY, that's awesome. We said 307.95, and even if you got out like right there, 310.91, that's almost a $3 move. But there's different ways of playing this. If you want to try to ride the trend, you will not exit until you get a close below the 8, and that would be clear up here. Okay, not where it just pierces through. Now this one's close. That one's close. I mean, you may exit there, right? And that would still be phenomenal. This is the first clear close, not piercing through, underneath. All right, so if it closed right there, that is 313.25. So that's over $6. That's like a $6 move, okay, from down here, and you just ride the trend up. Now, another way, and this is more how I would probably play it, I would be looking at an area like right across here, and I'll draw a line so you can see it. Okay, sort of right across, whoop, let me drag that down, right about there, okay? Because to me, on the way up, that's a highly likely area that price could stall out or reverse. Now, it actually went above it, and then it pulled back, right? And then it came back. Okay, and this is the 21. So a couple different ways that you could have played that. But you have to have the 8 and the 21 above the 100, which is right here. Then you're looking for some sort of an entry signal. In most cases, it's either going to be a long, it's going to be a hammer, or something bullish engulfing, or something to that effect, right? And I think everybody knows what a bullish engulfing candle is. It's when it totally engulfs the candle before it. Okay, but here we had a little hammer right off of the 8. So to me, the best entry would have been up here. The aggressive entry would have been right across there. Right across there. Okay, because you're above. Okay, price is J-hooking here. Everybody see this? Let me make it bigger again. Okay, in our room, my members hear me talk about J-hooks all the time. Okay, this is a J-hook. It comes back to your moving average, curls around, and then goes up, and that looks just like a J. See that? Looks just like a J, and it happens frequently. All right, that's what you had right there. So even though it poked down below, we never closed below, right? Never closed below. Here's your entry up here, at least for me. And then if I was trading this, there's a possibility I could have exited here, but if you're trying to trend trade, and again, this is, right here, it's just one day, right? So maybe you just look to exit by the end of this day, and that still would have given you a phenomenal trade. 307.95, let me find that last candle. Okay, let's just say it came down and maybe 310.75. So again, almost $3. Almost $3. And all you had to do was watch this. Okay, and follow the rules. Now here is where people get into trouble. Most people, most retail traders will not follow their own rules. They won't do it, right? They won't do it. So look, when this came up and then came back down here, they're getting out. Right? And if they were trading options, when this came way back on them like this, it probably ate up all their profit. Okay, maybe they still had a little, but when you were up here, if you entered here and the very next candle shot up to there, okay, you would have been heavily in profit. Right? And you can take it. Again, some people just have a set amount. Hey, if my trade goes up by 20-25%, I'm out. I'm just taking my profit. And that's absolutely fine. Okay, that's absolutely fine because that's a really, really high percentage way of doing it. Or you look for a level that you're trying to get to, or you're waiting to see a break of this 8 EMA, a break and a close. I'm sorry, a close below the 8 EMA, which technically this could have been. And in the short term, we're only looking to scalp or day trade. So that would have been a phenomenal day trade right there. Okay, right there would have been a phenomenal one. Okay, let me go back. Let me squeeze this back in now that I've moved my chart. All right, so now price, when you see this type of a range, you are not interested in a trade. Let me show you. When you see this, right through there, that pink area, you are not interested in a trade. Okay, why? Because the action is sideways, right? This is a trend trading strategy. Trend trading strategy. So somebody may say, well, wait a minute, this is above this and this is above this, right? But look at the action. And here was the start of a new day. Here was the start of a new day. Okay, did you get any kind of clear direction, one direction or the other? No, you did not. No, you did not. It just chopping back and forth, right? Okay, so you wouldn't have been interested. You're definitely not interested when the 8 crosses back below. Okay, it comes back up, nothing. We got this big drop. It came down here to test. Okay, you're going to watch your lines. Now it climbs, right? Then we kind of range again. Let me draw it in again. Get some consolidation right through here, right? Then you see the 8 goes back above and we start climbing. And look, what did we have right here? Okay, a hammer-like candlestick. Okay, 8 is above the 21, 21 is above the 200. They're all sort of close together, which means what? Building of energy. We talk about that all the time. So when you take the top of this out right here, that could be your long signal. And then when are you going to exit? You're either going to have a predetermined target, or you're just going to ride. You're going to ride the trend until you get a candle that closes below the ADMA. Okay, so let's look at this, right? If you would have entered, the high of this is 314.81. So let's just say, I'm just making this up. You entered at 314.85. 314.85. It has already been as high as 317.88. So that's already been a $3 move. That's already been a $3 move. Okay, it has not closed back below the 8. Now, again, here's the end of the day. So that's the last candle. So you would have actually exited probably right there, right? Because you want to get out before the end of the day, because this is a day trading, scalp and day trading strategy when you're using the 8, 21, and the 100. Okay, now the very next day, it did open much higher, right? It gapped higher. Let's take a look. All right, it gapped higher. Now that's if you're swing trading, you'd still be in, but right, it could gap lower too. It could gap lower. But again, when you wait for the right signal, look how the probability and the move, look how it goes in your favor, right? You have to understand you're not going to trade this when it's ranging sideways or even like right in here. Okay, but here you're not getting any signal with the moving averages anyway. Here, okay, when we're starting to see this go back up above, that's when we're looking for a signal, and we got it right there. Right there was our signal. Okay, we take that out, we just stay in it, and look, it's not even close. All we did was pierce there, and then it bounced right back up until you get a close or you get to the end of the day. If you can have the patience, you can make awesome trades, awesome high probability trades. All right, then it comes up here, it rolls over, okay, it's coming down. Now, these are different strategies, right? Somebody could say, hey, I want to catch this. Well, obviously you can catch moves like that, right? Okay, you could take a just a simple range trade. Okay, so we had a rally, base, and then it starts to drop. It breaks out of here. Okay, then we even had a 3-candle pattern play in the drop. Okay, that's what this is, right? Big, wide-ranging red candle, resting candle, another candle that's usually going to be similar in magnitude to this. It was actually bigger, and it actually dropped all the way back down to our trend line. And that's where it finally caught support, right here at this upward trend line. Everybody notice that? Okay, but right now we're talking about the trend trading strategy, so just kind of ignore that. But I'm just saying there are strategies where you can catch this as well. All right, so now let's move it over. Okay, here we go. Now, the only thing about this is it's the last candle of the day. It ended up being an awesome candle, right? So you could have taken the top of this hammer. Now, this would have been a scalp for sure. Top of this hammer, because what do we got? We got the 8 going back up above the 21, and we're above the 100, and we have a hammer. So we take the top of that, which was 317.53, so let's say 317.55, and it went as high as 319.76, so that was a $2 move on one candle. Now, for me, I probably would have had a target of the top of this range right here, this line, okay? That was that expanding range, the top of it. That probably would have been my target, and I would have been out. Plus, this is the last candle of the day. So you'd have to be super, super careful, right? Wherever your stop is, whatever your risk tolerance is, as soon as that thing started moving up, I'd be moving my stop up into profitability. It goes up a little bit more, I'd be moving my stop up a little bit more. Especially you start to get to the last 10 or 15 minutes a day, it gets highly volatile. Highly volatile. Okay, but again, just using the strategy, Boom, another winner. All you have to do is follow the rules. All you have to do is follow the rules. Okay, we come up here. Here's your next day. There's nothing to do up here. Why? Okay, look how far we are away from the 8. You have to know your surroundings, right? Once you start to get far away, you're likely to pull back. Now, once it pulls back, that's where your trading opportunity is. I talked about that in the room. Okay, so we come down, then we bounce up, and then when you take the top of this candle out, right, that could be your entry to go long. And then, is this the last candle of the day? It is, right? Okay, so you're looking to enter at, let's see, that was 320.72, so let's say 320.75. And then if you held until the end of the day, 321.87. So that was, what did we say this was again? 320.75 to 321.88. So over over a dollar to the good, right? Over $1 to the good. Now this probably would have stopped most people out, okay, including myself, right? When you see this big of a wick coming down below the 8, I'm just telling you right now, I probably would have been looking to exit right there with a stop, which would have been a losing trade. If you held, right, you would have won. But this one, and I'm just telling you, that one would have stopped me out too. That one would have stopped me out too. So it just depends on how aggressive you are with moving your stops. Yeah, because our entry was here, right? Our entry was here. But I guarantee you that's going to stop most people out. All right? So you're not going to get every single one of them. Okay, here, this is a range, so we're not interested. Okay, right through here, this was a range. Now let me see this one. Okay, all right, so an entry here would have been above this candle right there. And then we ride it, we ride it, we ride it, and here's your end of the day. The actual end of the day would have been down here. The close was 321.67. The entry was 321.08, so say 321.10. So that was, what, about 50 cents? Or you could have closed out earlier, right? Maybe your target was up here, right? Maybe your target was up here. Okay, I look for targets. Okay, so if you did that, 322.29 from 321, whatever we said this was, 321, let's just say 321.10. And then your target up here, 322.29 or whatever we said it was. So there you made some decent money if you're shooting for a target. If you let it come back, you would have made 50 cents, right? If you're playing options towards the end of the day, that's probably not a great move to end the day. But as you can see, our scenario, it moved right up. It moved right up. So you're going to have some trade management involved. All right, now let's go back and look at ES. Then we'll come back and look at some other stuff. Okay, so look at ES. Whips on again, right? Whips on again. So now we came from here and we're shooting back up. We're above opening price level. We're moving back up towards our resistance level. If we come down here and look at our momentum, remember it started to dip below and then look what it did. Boom, it went right up. So momentum is still to the upside. I mean, we can visibly see it. If you want, you can draw a line. Oops, I have a rectangle. We want a trend line. We get this for you. Okay. All right, you can just do something like this. Right? Now that's pretty steep. And what do we know about steep climbs? They can exhaust and then they can have big drops. They can look like this on the downside. So Who knows, right? Who knows? We may go quite a bit up. We may. Let's look here by squeezing this in. Want to see what we're likely to do. All right, now we haven't been able to break through this area yet. All right, so what I want to do is I'm going to draw a gray box up here that will just let you guys know. Okay, here is the area that we've got to get through. Okay, we got to get through that area to keep going higher, and we've got to get below this to start going lower. Okay, so what do we have right here? Okay, a contracting range, right? This is where we went. We came all the way down. Now we're working our way back up. If we get up in here and we reverse again, do we get down here and bounce, or do we finally start to break below? This is the information that you have to have in your mind. So we got some new people. Welcome. This is the kind of information you have to have in your mind. Can we get through here? We haven't been able to do it yet. Got up here once. Okay, right up here. And we know what this is. Let me come over here. Right? This, we hit that to the tick. Right? The top of these bodies of these candles here, we hit that to the tick. We came back down. We were trying to form a cup and handle, and it never formed. Right? That's why you have to always say something is potentially a cup and handle. Somebody in our room called this out and said it looks like we're forming a cup and handle. Absolutely. That's absolutely what it looked like. Okay, here's our cup, right? Here's our cup. We came up to here. Here would have been our handle, and if we would have continued on up, but instead we rejected in this same area. We rejected. We come back down, and now price has been climbing in the short term. Okay, so what are we doing? We're looking to see what's going to happen when we get back up here again. This has been an area of resistance, and if it does reject and starts coming back down, are we able to get below this, which has been an area of support, this trend line? That's how simple it is, right? We don't have to overcomplicate things. We do not have to overcomplicate things. We keep it simple. All right, let's go back. Here's what I'll do. I'll put an alert up in here. This will let us know if price really starts to climb. And then I will put an alert back down here. This will let us know if price starts to come back down. I want to go look at some Forex. All right, so we got our alerts. Now, let's look at Euro GBP. Euro GBP. Okay, now first of all, what do we see here? Is this not a classic double top right on the 30-minute? Okay, I'm going to bring it in a little bit. The only thing that I would like to see is that this wasn't as deep, but that's okay, right? That's totally okay. But we had the classic double top here, and then we've had this big sell-off. Now this is what I called out in the room last night. Let me show you the before and after. Anybody who's brand new, okay, here they are. Anybody who is brand new on this YouTube channel and you've never been to our room, go to simpletradinglife.com, click on the free chat room button, and you can join us for free. Doesn't cost you a thing. Does not cost you an absolute red cent. All the content is free. Our only goal is to help you and all traders become consistently profitable through simplicity, by keeping things simple. Okay, so here is what I was calling out last night in the room, right? This is Euro GBP. Okay, so this is the Euro pound. This was the 1 hour chart. When I trade Forex, I predominantly like the 4 hour for swings, the 1 hour, and the 30-minute. And the 1 hour can be either swing or shorter term. And the 30-minute is for scalps and day trades primarily. All right, so this was on the 1 hour chart. This was a set and forget trade. Okay, so that means that once you've entered it, you've got to stop, you've got to take profit target, and you can literally just let the trade play out. So based on what, and you can't even see it because the 100 is way down here. Okay, it's off the screen. So we've got the 8 is above, the 21 is above, the 8 and the 21, and they're both above the 100, right? The 8 is above the 21, and we were already climbing. Okay, so here was price, it got up above, and this little hammer right here, that was the trigger. And so in the room, I said, price takes out this, that's your entry. This is my take profit target. My take profit target was right here. That's what TPT is, take profit target. That was mine, right? Although I know that's conservative, it's likely to go higher, and you already know what the outcome was because I already showed it to you. So that's what I posted in the room. Here's how it played out. Right? It went right to the target, and it actually went up to this level, which was a resistance level. Okay, on TrendSpider, they actually, as you can see, they actually put the prices to the left. I haven't figured out if I can adjust that to where the prices are over here on the levels. But this was a resistance level, and it formed this perfect double top. And then now, if I go back, you can see after the double top, look at the sell-off. Look at the sell-off, right? That's amazing. But this is how, again, over and over again, I'm just going to keep telling you, if you want something that is simple, that is rule-based, and that plays out over and over and over again, okay, use the simple trend trading strategies. All right, now what I'm showing you right now has been short-term. Again, this was what I put in the room last night. And I just walked through it. All our conditions were met. The 8 was above the 21. These are the EMAs. Okay, both of them are above the 100, which is clear down off the screen. Okay, that's how high they are above. Once we got a trigger, which was this candle right here, this little hammer, you take it right above there. Okay, you take your entry right above there. And then I was going for just a target. Right? I wasn't trying to ride it. I was going for a target. This was 17 pips from here to here. It was such a high probability trade. I mean, literally now, nothing is 100%, ever. Nothing is 100%. But this here, I felt as confident about this as any trade. Any trade. Okay? Momentum was up. All our conditions were met. We got the perfect trigger. This was even this strong, like, green candle here. And then this is how it played out. It went right up and hit it with no problem. It actually went up to the next resistance level, double topped, and then sold off. And then this is what happened after the double top. Right? And that's a totally different strategy. Right? Double tops. In fact, let me look at something. This is off the subject, off topic a little bit, but let me look at something. It may or may not have played out. Let me put this on. Yep, it sure did. All right, so another strategy, and I'll get to this in the room later. Yeah, when I say later, I'm not talking about necessarily today. A very, very common strategy is double tops and double bottoms using Bollinger Bands. So if you're somebody who likes Bollinger Bands, look at this. See the double top? And it's just what it sounds like, right? So you topped at the top of a band, and then you double top up near the top of a band. Now, I think the actual rules, and these are from John Bollinger himself, I think the actual rules are the second one, you don't want it to go through the bands. The first one can. The first one could actually pierce through the bands. The second top, whether it's higher or lower, he likes it to be no more than touching or below. And then if it's a double top, then you're looking for a sell-off back to the other side of the bands. And look, really your target would have been here. The fact that it went all the way down there is just gravy. Your target would have been when it finally got to the other side and touched the band. So that is a John Bollinger who created Bollinger Bands. That's one of his trades. Double top or double bottom. And here it is right here. Look at this. So down here it pierced, comes over, forms the double bottom. It does not pierce. It can touch, but does not pierce or go lower than the band, right? It doesn't matter if this is slightly above or slightly below, as long as it does not pierce through the band. This first one can, the second one is not supposed to, and then his strategy says that you're then highly likely to go from here to the other side of the band, which that would have been right there, and look where it went though. Okay, look where it went. It went all the way up here. You could combine, right? You could combine the 8 and the 21, and you could have just rode the 8 all the way up until right there. Look what kind of trade that would have been. Look at that. From here all the way up to there. Okay, but that's something else. I'll teach you guys this strategy and other strategies as we go forward, but that's why I wanted to throw that on there. I just kind of figured in my head, I'll bet you that that was a perfect Bollinger Band short right there, and it was. A Bollinger Band double top. And then right there's a double bottom. They play out way more than you would think they do. I'll just look real quick to see if we can find any others. Okay, let's see here. Those ones just happen to be like really, really close together. There's all different kinds of ways to play Bollinger Bands. Okay, Bollinger Band squeezes, right? This is a squeeze, and you're waiting for a breakout. Whoop. Oh, it's not going to go back any further unless it loads data, which is fine, Let me get the Bollinger Bands off of there because that's not for today. Take them off. All right, but anyway, so that was the Euro Pound trade that I'd put in the room last night. Okay, and obviously I was going, that's why that line is right there. That was my target. That was my target, but it went clear up to here and then it sold off. So hopefully you guys can see. Hey Kelsey, good to see you. And you're quite welcome. That's what I'm here for, is just to try to help and teach and help everybody become more consistently profitable. All right, now down here, I want you guys to see something here. Down here, again, this is still Euro Pound. We've had this big sell-off. Now we're getting a hammer off of a support level. Then we got another hammer, a little bit smaller. Okay, so what we want to see now is price going to reverse, or is price going to go into a range? That's what you want to look for. If you're a Forex trader and this is a currency pair that you like to play, that's what you want to look for. Okay, now look at this. Somebody may ask, well, where did this support level come from? Look right here. That's where it came from. Okay, on a bigger picture, now this is the 30-minute, but on a bigger picture, right, we had this strong rally, then we sort of based, then we rallied again. It's this basing area right here, okay, that created, and that would have come from really like from a 4-hour chart, because that's how we get our support and resistance levels for the most part. But you can draw it in right off of here, right? If you're on the 30-minute and you don't want to have to take the time to go over to the 4-hour and switch to the line chart and draw your lines in that way, if you're on the 30-minute, you can just look, right? Can't everybody eyeball this and see that, oh my gosh, yeah, here's a level that's probably going to be important, right? You just draw your line right across the bottom of the majority of those bodies, straight across here, and look where did we get the bounce? Right there. Look at that. That's where we got the bounce. Highly likely, right? Highly likely. Now, if you're super aggressive in your trading and you saw this double top, maybe you were playing the Bollinger Band, strategy, and you wanted to combine it with a likely target, and you're thinking, hey, I'm fine being in this trade 1, 2, 3, 4, 5, 6, 7, 7.5 hours, okay? Then that would have been a great target right down here. Again, let me squeeze it up so you can see. All right, you see that? Here's your double top, okay? And if I throw the Bollinger Bands back on there again, I'm sorry, let me come over here. I might as well just go ahead and talk about this while we're here. Okay, so there's your Bollinger Band double top, meeting his rules, right? And rules are only good if you follow them, right? I was having this conversation in the room with one of our traders over the weekend, and everybody says, well, if it was that easy, then 85 to 90% of people wouldn't lose money. Okay, listen to me. And I'm not like being mean or trying to be contrarian or whatever. It is that easy. It's us that get in the way. It's our human nature that gets in the way. Okay, we are programmed a certain way. You have to reprogram your brain to be a successful trader. Because what do we always want to do as humans? We want to do it our way. And we're greedy. And we're fearful, and we have all these emotions that come into play. When you follow rules to the letter over a wide range of trades, you're going to win more than you're going to lose. And when you start doing things correctly, right, strict risk management, proper reward to risk, which for me, I like 3 to 1, but you can even be 2 to 1, right? I don't like 1 for 1. 1 for 1 means you have to win at a really high rate. Now, I know some very successful traders that trade 1 to 1, 1.5 to 1. But they win so often, they're like 70-75% win rate. That's how they're able to have that small of a risk to reward or reward to risk. You have to win if you only have 1 to 1 or 1.5 to 1. Right? Let's just do the math real quick. If you're 1 to 1 and you go 50%, you're actually not break even. You're losing money because of your fees and if you have any commissions or spreads, right? Your spreads. So you can't even be 50% if you're going 1 to 1, right? So let's just say you had $100 per trade. If you won 5, that's 500. If you lost 5, that's minus 500. That's 0, but that is before fees, commissions, and spreads. So you're actually in the hole. So the only way to win at 1 to 1, and really kind of 1.5 to 1, you need to be about a 70, 75, 80% trader, and there's just not that many of them out there. You're a phenomenal trader if you consistently win at 70% or higher. Okay, they consider great traders 60 to 65%. Meaning that's what you win all the time over hundreds and hundreds and thousands of trades. So if you're at 70 to 75% or anything up around there, you're considered elite. Elite. But I would much rather be a 60% trader. That's about where I average in, about 58 to 65. I'll fluctuate normally. I've been hot lately. Okay, but I don't expect that to last, right? The law of averages say that normally I'm right around 60%. I'd rather be 60% at 3 to 1, right, than be 70, 75% at 1 to 1. It's just a much harder way of doing it. Although, like I said, there's some very successful traders out there that do it that way. All right, because obviously the smaller your target is, the much easier it is to win. All right, just makes sense. All right, but if you are somebody who can humble yourself, right? Humble your own ego is what I'm saying. I'm not saying you're out there bragging or whatever. Humble your own ego and just follow the rules. Whatever your strategy is that you're employing, follow the rules, right? Be patient, be disciplined, be focused. You're going to win money. Oh, thank you so much. I appreciate that. I appreciate the kind words. And I'm glad you subscribed. I hope a lot of people do. We're growing. Our room is growing like crazy. Like we're almost up to 400 members in our free chat room, and we're closing in on 200 subscribers with the YouTube channel. And the YouTube channel started much later than the room, but both of them are fairly new, right? I think we're, gosh, Grayson would have to help me. I believe we're maybe about 6 months on the room, and probably half of that, or a little bit, not quite half of that, meaning it was a couple months later we started the YouTube channel. So yeah, I really appreciate that you subscribed and that you're enjoying it. All right, Tammy, got an ES point on that 30-minute opening range breakout that you just taught. I chickened out and sold out way too soon. I got you, Tammy. So let's go back and look at that. We can flip around here. All right, so opening range breakout. Let me get this out wider for everyone so everybody can see. So if you guys are just tuning in or just tuned in a few minutes ago, if you're using a 30-minute opening range breakout, here would have been your range. The top of this to the bottom of that. Okay, there was your opening range. Top of this to bottom of this. When you break out in a solid manner, and for me, that's 4 to 6 ticks, okay? Then you're going to put your stop wherever your risk tolerance is, and then you're going to have either a target that you're shooting for, or again, some opening range breakout strategies say you're looking to double this. Okay, and we already know that's about a 15, 16 point range, so then that would be a target. Now, I like to go for other targets. So for me, let's see here. For me, it probably would have been right here. I know we're already above there. And one thing you'll learn about me if you're new, I don't exaggerate anything, right? I'm exactly the opposite. I'm ultra conservative in most cases. So somebody might say, yeah, I was shooting for up here. No, that's not me. I would have been shooting for right underneath here, right? Because it had been rejected before. So I would have been shooting for here so we didn't get a bounce and a sell-off against me. So from the top of this range, that would have been 32.21, we'll say, to the up here is 32.20. So yeah, so that would have been a little over $4 move, right? And so on a standard contract, 200 bucks. On a standard contract, that would have been 200 bucks. And it's still going, all right? So where would your next target be? 32.31.75 is our next resistance level. But let's come back over here and let's just see. All right, we got to get through this wick. See this wick? What's the top of it? The top of it is 32.28.50. Okay, we're through it. We're already through it. Okay, then you have this wick over here. The top of it is 32.29.75. So we're right up at the top of this now. We break through this, you're just about guaranteed to make it to this level. 32.31.75. All right, so we come back over here. Kelsey says she was looking at 31.35. Let me make this a little bit bigger so you can see again. I don't know, here's Thinkorswim again. Look at this, I had an alert set and it never triggered it. That's why I don't trade on Thinkorswim, and I'm probably going to eventually switch all my analysis over to TrendSpider as soon as I get more familiar with it, but I'm really liking it, as you can see. I'm still doing a lot on here just because I'm so used to Thinkorswim, but I like the tools on TrendSpider even better. They're more intuitive and easier to use, and I do want to show you guys something on that too. I don't want to butcher your name. Is it Ekawande? Is that how you say it? Ekawande? You're asking if I trade options? Absolutely. I trade a little bit of everything. I trade options, I trade standard contracts or standard lots, and then I also do trade occasionally some shares on equities. But most of the time, if I'm trading stocks, I'm trading options. On ES or futures, I've just switched in the last couple of months. I've been trading more standard contracts and then also trading options. Standard contracts, obviously, it's just per tick, right? There's no premium involved. So if it goes up 4 ticks, you made 50 bucks. If it goes down 4 ticks, you lost 50 bucks. With options, it depends on how fast it climbs or how fast it drops, and obviously other factors. So yes, I trade them both. Ekawande. Okay, good. I didn't want to butcher that, so I'm glad I was at least close on that. But yes, I trade pretty much everything, right? I trade pretty much everything. And I would say predominantly I'm a futures trader, secondarily a Forex trader, and thirdly an equities trader. But I trade them all, right? Like each week I'm typically trading 90% of the time in futures and then just about 10% in everything else, but then I'll go through phases. So if for some reason volatility in futures, specifically ES, gets crazy and the premium gets jacked to where it doesn't make sense, okay? And what I mean about it doesn't make sense, well, first of all, it becomes extremely expensive. And then second of all, if the volatility is high, back during the market correction, I can remember this specifically. I think it was either on a live stream or it was in the room. I had showed a trade one time. I did not get filled on it. And I was kind of upset at the time, but it ended up sort of working out because the volatility was nuts. It went from where I was trying to enter, within a couple of, literally a couple of minutes, I would have been up like 15 to 1,800 bucks. Then a couple of minutes later, I would have been down like 1,100 bucks. And then a couple minutes after that, I would have been up like 3,400 bucks. And then it went all the way back down and I would have been down, again, over 1,000 bucks. And all of that happened in a span of about 5 to 8 minutes because the volatility was crazy and the premiums were so high. When market conditions are like that, I typically just trade Forex predominantly, right? So hopefully that kind of answers your question. And let's get back over here real quick. All right, as you can see there, okay, we poked our head up to 29.50. Remember, the top of that one wick I showed you was 29.75, so it couldn't take out, it took out the first wick that I had showed you to the left, but it could not take out the second wick. It got right up to the top of it. It was 32.2975, and this candle's got up to 32.2950. So far it hasn't been able to get over that second wick, and I'll show you where I'm talking about. It's just easier to show you. This one, right here. It hasn't been able to clear this one yet. It cleared this one, but has not been able to clear this one. So for those of you who are new, large topping tails or large bottoming tails are part of what we call obstacles. Okay, you always want to know, you'll hear me say you want to know your surroundings. So you want to know, are there obstacles? Moving averages can be obstacles, support and resistance, opening price level, trend lines, Large wicks, those are all potential obstacles, meaning price could struggle there or even reverse depending on other factors. Okay, so those of you who've been with me since the beginning of this live stream, what did we say at the beginning when price was down here? We said it either needs to get through here to go higher, or it needs to get through here to go lower. Well, what did we do? We made it through here. It's now made it up to the top of that one wick, but has not been able to get over it yet. Okay, a lot of times it'll go up to it, it'll waffle, sometimes it'll pull back, regain strength, and then break through. So we just need to watch. What would have to happen to indicate a momentum shift to the downside? Well, you can look at a bunch of different things, Kelsey. Obviously down here, this is what we use for momentum. And as you can see, it's still up, and it's actually up really strong. Right here was where it barely poked below, and then it just turned around. Okay, so momentum is still up. Obviously, you can look here. Okay, price is up. The only thing that I would start to get concerned about is how far away we're starting to get away from the 20 here. Okay, we know that if we get too far away from the 20, price will typically come back to the 20 or near it, right? And that's nothing more than profit taking. Okay, so you see our little levels here, how we come up, how we're climbing up, and now all of a sudden we're going up bigger. Okay, we went higher high, higher low, higher high, higher low, higher high, higher low. Actually, I take that back. We had a lower low here. And then boom, we blasted off. But our lower low was the 20 and the trend line, the confluence here, and then boom, we just blasted to the top. Okay, so right now, until something changes, momentum is still to the upside. Plus, we broke through this area, which had been pretty strong resistance. Now, are we going to come up, come back and retest, right? Our break, retest, and go? We don't know yet, right? We don't know yet. See, we got several more new people. Welcome. We've kind of, obviously, we've been going through ES. Okay, we looked at a little bit of Forex. We were looking at trend trading strategy, and I'm going to look at a longer term one here in just a second. We looked at the shorter term one. I'm going to look at the longer term one and go from there. Let me set an alert if it'll go off. I set the alerts last time and they didn't go off. I mean, I'm telling you, I sound like a broken record, but Thinkorswim, man, I don't know how they have anybody anymore. I mean, it's just terrible. It only works part of the time, and you set an alert and then it doesn't even go off. All right, so if it continues to climb, hopefully that alert will go off. So let's go back over to TrendSpider. I'm going to turn the Bollinger Bands back off. We're going to go to a different time frame. Whoops, that's patterns. I need indicators. There they are. Okay, I want to get those off for now. I'm going to take all of these off. Well, actually, I can make this one 200. Can leave that on, and I need to get rid of these. And I'm going to go to a daily time frame. Okay, that's our 200, and now I'm going to add a 20 and a 50 simple moving average. So there's the 20, and that will be blue. And let me do that. I'm going to do it again. This is going to be the 50. This will be our signal line. That's going to be red. And we'll apply them. Okay, so now we're looking at longer term. These would be more swing trades, but still using the trend trading strategy. Okay, the trend trading strategy. So let's just look at the screen here. Now, here, this is the daily chart. So this is a lot of time here, right? This is going back to July of last year. We're looking at a year's worth of data just on the screen. So what was the trend back over here? Okay, just simply looking at it, not trying to trick anybody, right? It's to the downside, correct? Okay, what are our rules on our simple trend trading strategy? On our simplified trend trading strategy. Okay, if we're looking for downside, we want the 20 below the 50 and both of them below the 200. That happened right here. Okay, now, here's what I want to do. I'll show you. So this is more for people who like to swing trade. I'm trying to just make it bigger for you. All right, so here is where they're now below. Look at this. We get a shooting star right here. You could enter right there. You can enter right there. Okay, we got this initial move down. Then we ranged back over. Nothing to do, especially if you're swing trading. We did not close above, right? So you stay in the trade. We did not close above. We did not close above. Look at this. Another shooting star all the way down here. And then here is where we finally closed above. Now, if you had no other targets, right, meaning over to the left, if you had no other targets you were shooting for, this would have been an exit. Or, okay, I'm just telling you how I would have played this. If this would have come down and I saw a hammer down here after this strong move to the downside, once we took that out, that's where I would have looked to exit. That's just me. That's just me, right? Okay, so from here, that was 87,164 down to here, that's 83,666. So let's figure this out. 87,164 minus 83,666. 87. Sorry, guys. 87,149. So let's just say 87,145. 7,145. And then taking out the high of this was 83,641. So let's just say 83,645 minus 83,645. That's 350 pips. 350 pips just by following the rules. Okay? 20, this is our longer term trend trading strategy. This is a simplified strategy. Again, this comes at the request of many people in our community, simpletradinglife.com, in our free chat room, who wanted to know, are there strategies out there that are easy to follow, that are high probability, that I can trade? And I'm giving it to you. I said what I would highly recommend, okay, those of you who are in my room, you already know this, what I would highly recommend is trend trading strategies, and you just follow the rules. That's all you got to do, okay? And there would be nothing here, okay, this would be a swing trade, right? There would be nothing here that should shake you out. 20, below the 50, both of them below the 200. Here's a trigger, a shooting star. You enter there, and look, it never closes above. It never closes above. And then finally down here, okay, it comes down. We get this little bounce. We get a hammer, and when we take that hammer out, that's where I would look. But even if you waited until it closed right here, you're still talking about a phenomenal move. 84,909. Give me 1 second. I'll tell you what it would have been, even if you waited for it to come all the way back. All right, so 87,145 minus, where were we at here? 84,83, or no, there it is, 84,942. 84,942. Okay, that still would have been 220 pips with no stress. No stress. you know, you have to be patient, right? And if you're a swing trader, then you probably already do have more patience, right? You're just letting it play out. You're just letting it play out, okay? Let's see, do we find any other opportunities? Okay, now somebody may say, what about right here? Okay, what about right here? Okay, are we above? Yes. Yes. However, let's wait a minute. No, we wouldn't have been. We wouldn't have been. Okay, because this was not above the 200. Now, if we're following our rules, we're following our rules. Now, you may have caught this because of another reason. Okay, but on our strategy, this at this time was not above. These need to be above the 200. Okay, so we come over here. And remember, you can apply this. I'm going to show you how I can do it. You can apply this to anything, to Forex, to futures, to any equities, to any ETFs. It works the same way all the time. All right, now here, both of them are above. Okay, this is a range, so we don't want anything to do with this. Let me show you. Right through here. Okay, you don't want anything to do with that. Why? Because it's just going sideways, right? It's just going sideways. Here could have been potentially, okay, breaking out of this range. Now over here though, I'd be drawing a line. I'll show you. I'm really conservative, folks. Okay, I'd be drawing that across the bottom of there. And look where it bounced. Okay, right to here. Now how many pips is that? You take the top of this one out. 90413. Okay, give me a second. So we have 91708 minus 90413. That's 129 pips in 1, 2, 3, 4, 5, 6, 7 days. So a 7-day swing trade for 129 pips. Not bad, right? Not bad. That's how I would play that trade right there. Okay, both, we got the 20 above the 50, both of them above the 200, breaking out of a range with a conservative target. Conservative target. All right, let's see if we have anything else. Nope, that brings us to where we're at today. All right, now we came down, we bounced off the 50, we came up, we're coming back down to retest. Now, if we get some sort of a bounce, if we get a hammer, if we get something like that in these next couple of daily candles, then we'd be looking for a swing to the upside. Then you'd be looking for a swing to the upside. All right, now I'm going to show you how you find this kind of stuff. Okay, go to the market scanner here, condition, daily, price, close, greater than, indicator, daily, 20 simple moving average. And then we have to add them all in, right? Because now the 20 on the daily, 20 needs to be greater than the indicator, the daily, the 50, and then the 50 needs to be above the 200 on the daily. Indicator, 50, greater than, indicator, daily, 200. All right, so there's a scan. First of all, I'm going to do it on my list. Okay, my favorites is my list. These are all the names that are on my list that meet that condition. Okay. Let's see, Netgear to Amazon. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's about 19 or 20 of them. There's 19 or 20 of them off of my list of about 30, 35 names that meet these conditions. So if I just go to any of them, if I go to Tesla, it'll bring up the Tesla. I'll make it big so you can see it. Okay, give me 1 second here. I want to make sure I can see your comments as well. All right, so are the conditions met? Absolutely. 20 is above the 50, 50 is above the 200, price is above the 20. Now, here we had a little bit of a J hook. Well, I shouldn't say a little bit. That's a big J hook, right? And then up, and then price has been consolidating. It's actually contracting. You see this? It's contracting, so that means it's getting ready for another move. It got way far away from the 20, and that's why you're most likely seeing this pullback. It's letting the 20 catch up. It could even drop down to it, right? It could drop down to it. But the conditions we're looking for right now, we only want high probability longs with these conditions. We would have the exact opposite scan if we were looking for shorts. Okay, this is a scan for longs. All right, let's go back over here. All right, look at this. This is when it got above. Okay, we're above the 200. 20 is above the 50. Price is above there. Okay, when we took this out right here, okay, you could have went long. Now, the only thing is you'd have to be patient, right? You wouldn't have got stopped out. Look at this. It just went sideways, sideways, sideways for a couple of weeks. Then we started moving up. Okay, sideways, sideways, and then boom, big move, right? So if you were patient and you're a swing trader and you follow the rules, you would have caught this. You would have caught this. Now, where would you sell? Okay, obviously these are all-time highs. Okay, if it was me, I don't know. Like right here, we had a rally base rally. Then we've come back down. I would probably have looked to get out once we got back into here. We hammered, but now we haven't been able to take the top of the hammer out, and we're consolidating. We're in this contracting range. I don't know. Okay, I'm just saying for me, because that's pretty big right there, coming all the way back down. This high was 1794. And if you come back down to here, you're talking about 1545. That's like 250 points, right? That's 250 points that it came back right there. Am I doing that right? Yeah, that's right. That's right, just to the top of there. Okay, but just following the rules, right? Your entry would have been above the top of that wick right here because we came back. Remember, I said pullbacks are the best time to enter. Pull back to the 20, and then we start up. We take the top of this wick out here. You would have never got stopped out. It just went sideways, 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 took a little climb, pulled back. Okay, sideways, sideways, then J hooked off of here, and this huge run up. This huge run up. All right. Let's go back. We'll look at a different name. Okay, so all I did was I created the conditions for a simple scan. Let's look at Baba. I haven't looked at any of these. I just put the scan in. You saw me. I just like literally put it in and brought it up. All right. So here's our conditions. Right? Here's our conditions. This right here is kind of choppy and sideways. I wouldn't like it until right over here. So let me draw this for you. Well, if there was a box right here, okay, I don't like this. Okay, wouldn't have caught that. Wouldn't have caught it. I'm just telling you. But right here, when you see it bounce, this big green candle taking all of this stuff out, and that's bringing you back up to the top, then you get this candle here, which is above. That's telling you That's telling you what's likely is a 3-candle pattern play. We're on the daily, and we know that if it works out, right, this is going to be similar magnitude to this. That's telling you right there you have the potential for a nice move. So if you enter, okay, 3-candle pattern play actually says you enter right above here. So the high of this candle, 207.20, and then we just follow the rules. Okay, so the rules say that we're not going to get out till we close below, or you drop significantly below. So for me, that would be like right over in here, 218.78. And what was this? This one was 207.20. So this is like an $11 move. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So almost 4 weeks, but an $11 move, right? So again, these are for swing traders here. You're going to do the scan the opposite if you're a short-term trader. You're going to put in the 8 EMA. Let's just do it. I'll do it. Makes it easier. Okay, so let me get rid of this. We're going to start all over. You'll see me put it in. And you can probably do this on most charting software. All right, so up here we're going to want to be on a 30-minute. All right, and then everything I'm going to do will be on a 30-minute now. So we want price. And right now I'm just going to do longs. Okay, close, greater than. Oh, I have to switch the indicators. I'm sorry. That is something that you have to do on here. So I have to go back and I got to take these off. I got to make this 100. And now I have to add EMAs on. And I have to have, this one will be 21. And then this one will be 8. So you're seeing me do this in real time. I'm just literally creating the indicator, the scanner. That's what I'm doing. I'm creating the scanner. Okay, so indicator, 30-minute, and I have to start all over. Okay, 30-minute, price, close, greater than, indicator, 30-minute. Here we go, 8 EMA. That's my first condition. Price needs to be above the 8. My second condition, 30-minute, indicator. My 8 needs to be greater than my 30-minute, 21. There's my second condition. And then my final condition is my 30-minute, 21 needs to be greater than my 30-minute, 100 simple moving average. There's the condition. Okay, so now we're looking for scalps and day trades. I scan. This is my list. Okay, those are the names out of my list that meet these conditions. Let's look at Netgear. Okay, here's Netgear. Wow, look at this. Look at this. Okay, so Netgear. Is the 8 above the 21? Yes. Is the 21 above the 100? Yes. Okay. Where could we have found entries? Right up here. Right up here. Now, the top of this gets taken out. It goes sideways. Once you're in, remember, what is the rule? Unless we come back and close underneath the 8. Do we close underneath the 8? Nope. We climb. We climb, we climb, sideways, we still don't close, we climb. All right, now, this is a day trading thing, so I have to come back here. Our entry would have been here. The last candle of this day was right here, okay? Right there. So just here, this one, 25.90, is this the last candle of the day? It closed at 26.65, so that was $1 something. Then the next day, once this gets taken out, what's the high up here? 26.72. Let's find the final candle of the day. Right over here. Okay, here's your final candle of the day, 28.22. 26.72, so that's over $2 that day. Okay, then the next day, this is the day we're on now, as long as opening price is above and goes green, so opening you would have entered at 28.75, and currently you're at 29.42. 29.42, right? Okay, so here's the scalp day trade version of the simple trend trading strategy. You just follow the rules. And this is how easy it is to find them, right? You just do a scan. Let's look at AMD. I'm just picking things out at random. These are the names in my list that came up on the scan. All right, so here's AMD. And, okay, we just curled above. Look at this. Okay, so your entry would have been right here. All right, your entry would have been right there, and that was 55.55, and price is currently at 56.41 and still climbing. However, look at this area here, right? You are likely to see some resistance because what did we have here? A drop, base, drop. I'll draw it in just so you can see it. You are likely to see some, this isn't going to be perfect, but I want you to be able to see it. You're likely to see some resistance right through here. All right, so if it was me, because I trade a little bit differently, I'm more conservative, right? I would be looking for a target right up here. So once we get into this area, okay, once you get right here, I'd probably be looking to exit. Okay, on AMD, $1, you're making good money, right? You're making good money. But if you want to let it ride, now it may get up in here and bounce back and then, you know, significantly go underneath the 8, I don't know. Or you might just let it ride the rest of the day. Because it could break, right? It obviously could break. Anything can happen. I don't have anything else on here because I'm still playing around with a bunch of different stuff. The only thing I have down here is average true range. So the ATR for each 30-minute candle is about 44 cents. That means the range of each candle, both up and down, is about 44 cents currently. Right? When things are really volatile, they were closer to 90 cents on a candle. Right? But again, right there would have been your entry. Taking that out, and we're just now getting into this area that could be resistance. So it's still going up. It's now at 56.48. And where did we say we entered? At 55.55. So almost $1 already. Does everybody see how easy this strategy is? If you're new or you're struggling and you just want to find some consistency in your trading game, this is what you look for. And then, like I said, just follow the rules. Just follow the rules. That's all you got to do. Let's see here. Here's Twitter. Okay, same thing. Look at this. Okay. You see how when they come together and then they curl up, when all the moving averages come together, you'll hear me say this over and over again. It's a building of energy. Okay, we don't necessarily know. I mean, we can have an idea, right, based on price action. We don't necessarily know whether it's going to break up or break down, but when it does, it's typically going to have energy. Look at that energy from Twitter. Okay, so if we go back This was Friday. This is where it started. So here, taking this out, let's see what level that was. That was 35.36. Let me find the last candle of the day right here. And it closed at 35.81. Okay, so you didn't get much there, but then look at today. Here's the first candle, so taking this out would have been your entry. 36, that makes it easy. And we are currently at 36.93. So it has been up over $1, obviously. Let's scroll it in and see what we might have over here. Oh yeah, we're right here. That'd probably be a target for me, just to be honest. It may go up. It may go up. It's trying. But see how it got right to these wicks here? And that was also a pivot. Okay, so we know pivots are typically going to be resistance, at least the first time or two, and this is the first time price has been there. Let me scroll it in even more. Okay, I'm trying to see. Yep. Okay, so we also had a pivot here, and that's where this pivoted. Okay, and now we're back up there again. Are we going to pivot again and head back down, or are we finally going to be able to break through? We don't know yet, but again, following the simplified trend trading strategy, you would have already had $1. And if this was an area you had targeted, you could have just exited with $1. $1 on Twitter is going to pay. That's how simple it is. And I don't know if there's anything else we really want to look at. We could look at, I'm just picking them out at random. This is Apple. Remember, this is our short-term one. Okay, so here we go. Moving averages came together. That means energy. Look how they're starting to curl up. Okay, taking the top of that out right there. Is this our first candle? Nope, this is our first candle, so that's even better. Okay, first candle formed a hammer. You take the top of the hammer out because now the 8 is above the 21. All right, so our entry, 380, let's say 386.25, and currently we're at 389.48.50. So already up $3 and some odd change from right here. And we're right in the middle of a 3-candle pattern play too. 1, 2, 3. Those of you who don't know what a 3-candle pattern play is, you have a wide-ranging candle. This can work to the upside or the downside. So in this case, a wide-ranging green candle, a resting candle, and a doji is about as perfect as it gets, a doji or spinning top, in the upper 25 to 30% of this candle, preferably with not a great big wick. Okay, if you're going to have a wick, you'd rather have it down here, like a bigger one. And then when the top of this gets taken out, typically this candle is going to be similar in magnitude to this candle, give or take. Might be slightly smaller, slightly bigger, but typically they're going to be about the same magnitude. And that's what's occurring right here. Okay, now we know, you see this area up here, right across here could be some resistance. Let me do it like this. Just try to show you. Just giving you an idea. Now I can blow this back up. Okay, so this area right here where it kind of topped out, went sideways and then dropped, price gets up in here, this could be resistance. So you just want to know that, right? Right? You just want to know that. Okay, but again, there is another simple trend trading strategy that would have already given you over $3, like $3.30. Okay, it's pulling back a little bit right now, but you can play that either way. You could play it with a target of up in here and you just exit, right? Or you just let it play out and as long as it stays above the 8, You stay in until the end of the day. That's totally up to you. Now, it also depends on whether you're playing shares or whether you're playing options. Because let's say price comes up here and then price just starts to chop. If you're playing options, that's not good, right? You want price to move. If you're playing shares, you don't really care. As long as it doesn't come back against you, right, and drop below the 8, like let's say the 8 just keeps moving up like this, and price just keeps following it, well, then you can just stay in if you're in shares or options, depending on when your expiry is, right? All right. So hopefully, I know we've spent a lot of time on that, but this has been requested in the room by several people, and I just wanted to make sure. Oh, and look at this. I just hit my eye. Look what we're forming. Okay, we're forming a cup. Right? Or a slow curve. I like to call them slow curves. So from here, if you were drawing a line, so if we come all the way back up to here, we would expect to get resistance first, and then maybe it drops down, curls around, and then tries to go higher. And if it tries to go higher, well, then you're looking at this right over here. Let me show you right here. Again, it's just so much easier if I draw it in for you. See if I can get it the way I need it. Make this bigger again so you can see. Okay, there you go. So here's what I would expect to happen or anticipate to happen. We come around, we come up here, we get some resistance, we pull back slightly, and then if we form the cup and handle, it'll do this. It'll come back around, and then it'll go up to here. Then it'll go up to here. All right? Will that all happen today? Not necessarily, right? Not necessarily. But that is what's likely to happen. And we always say likely. Nothing is 100%. Okay, so there's a couple different ways you could play that, right? If it gets up here and starts to reject, you can just get out, lock those profits in. Then if you see price come around, and I would look for it right here to curl. Why? Because we had a rally, base rally. Okay, where this resting candle is. Let's say it came up here, starts to reject, comes back down. It would probably also catch the 8 right around there. Then you would look for it to J hook off of the 8 and then come up and test this area. Now that's getting just, it's still simple. Trust me, this is all basic stuff, but this is getting a little bit more advanced for those of you who may be brand new. But this is how you anticipate trades and you anticipate what's likely to happen. So if you're somebody who's trading Apple, or Apple is one of your favorite symbols, okay, you should already be anticipating. Remember, this is not mine, or I wish I could take credit for it, but I was watching a video one day, and the guy who was teaching on the video, he said, you want to anticipate and not just participate in the move. He said retail traders typically participate, good traders, big money traders anticipate. They anticipate what's going to happen, so they are ready to act at the best time. When is the best time? Well, the best time would be if it rejects here and it comes back down here. You should already know that like this would be a likely level that it would come down and probably also catch the 8 about the same place, right? And then they would be looking for a signal down here for a move up to here. Let's see. Hey, that describes the yes right now. I'll go back and look at it here in a second, Kelsey. Okay, all in one stupid joker. Would really appreciate if you were spamming somebody else. Okay, we don't like that here. Okay, everything we do here is free. So would just appreciate that you spam somebody else. Thank you. Sorry, guys. Okay, Does anybody have any questions? I will look at ES real quick, and then I'm going to go ahead and wrap this up. Okay, yeah, ES. Now see, the only thing I don't like about ES right now, I shouldn't say don't like, we could potentially have a 3-candle pattern play forming, but what did I just say I don't like? I don't like to have the resting candle have a big topping tail. Doesn't mean that you can't form it. Right? If it takes the top of this out, it has the potential to end up a similar magnitude of this candle, right? And that'd be some decent upside. That'd really be some decent upside. Will it play out that way? We don't know yet. We'll wait and see. We will wait and see. But we know what we're looking at, right? So if this comes down and starts to take out this area, okay, right down here, if we take out this gray area to the downside, then we're looking for it to come back to the trend line, right? If it takes the top of this out, well, then we're looking for a candle that's similar in magnitude to this going to the upside. That's what you would be looking for. So I hope that makes sense to everybody. And if anybody has any questions about anything, you can let me know, or you could even DM me, right? It doesn't have to be right now. It could be something that we cover in a future live stream. Okay. Well, everybody, I hope you have an awesome day. Let me also know in the comments whether you like it when I do the live stream in the morning or if you like it better in the afternoon. Just looking for some feedback there. Right now, we're going to probably mix it up a little bit, but I'm not opposed to one versus the other. I just thought today it'd be kind of cool to look at the morning price action, and I wanted to cover those questions that had come up in the room about simple trading strategies that are easy to follow and have a highly likely outcome of success. So, okay, Tammy says mornings. All right, awesome. Yeah, and again, you guys can just leave it in the comments, or those of you who are in the room, just let me know. Hey, yeah, I really like the mornings better. Whatever, or hey, I like the afternoons, and maybe we'll just keep mixing it up. But those of you who are new, we've had a great group today. Please give us thumbs up. If you're brand new to the channel, hit that subscribe button. Definitely turn on your notifications bell, and come check us out in our room, simpletradinglife.com. Click on that free chat room button and come hang out with us. All the content's free. You can ask questions. Like I said, we're closing in on 400 members. We're starting to really grow quickly. And our goal is to make this the biggest free trading community on the internet, with the single goal and single purpose of helping new, struggling, and improving traders become consistently profitable. So thanks for joining us, and we'll see you in the room. Bye-bye.